boy, I told you, you guys. I told you you'd be hearing from me again today. How you doing, you melon heads? You guys keeping your shirts on or what? Dow down 1,000 points on the day after a higher than expected consumer price index report. The market is in free fall. I don't know if free fall. The market took a huge drop right at the open. Then we came down. We traded for a couple of hours, down 600, 700. We tipped around 800 for a while there. I got to send a shout out to my mod Mish, who said it was 2 o'clock. 2 o'clock, that's when the margin calls come in, and that's when the sell-off is going to gain steam. And that is exactly what happened. Almost on the dot at 2 o'clock, we started selling off again. Now here we are, down 1,000 points. And we were talking about on the live stream today, while I had terrible, terrible audio problems for the first 10 minutes of my live stream. Sorry about that, but hopefully we got that fixed now. We were talking about how if it felt like 1,000-point down day and that we were going to have to probably drop another spontaneous live stream, and that's exactly what happened. And without any further ado, let's bring in the man, Mish the mod, and let's look at a couple of charts here. Mish, how we doing today?
I am doing good. I've been watching a lot of charts today.
Yeah, man. Mish and I, we have been talking all day, keeping track, saying, we just knew this 1,000-point down was going to hit, and we were going to end up going live. So we're, texting updates back and forth all day long. And once we went down 900, we were like, okay, 910, 920. Start making a thumbnail. Start typing a description. Like all the back-end stuff you don't realize goes into a live stream. It actually takes quite a while. So we were trying to get that stuff all set up and all in place so we could go live within a few minutes of hitting that 1,000-point milestone like we promised you guys this morning. Anyways, let's see what is going on in the indexes right now. The S&P is down 100. What's up?
I think my new name's going to be Mish the Mystic.
Mish the Mystic? The Mish Stick? The Mystic?
Yeah, that was a
master of the mystic arts?
Yeah.
Is that shtick? The Mish Stick? Like, what's your shtick? Anyways, S&P is down 148 or 3.6%. The Dow is down 1,074 or negative 3.3%. It looks like we got a little bit of a bounce here, but I mean, a tiny little one is just off the low of the day. I can't even call that a bounce. And let's see, the NASDAQ leading the way lower, down 603 points or 4.74% on the NASDAQ. Rough day for stocks all around. Let's see what commodities are doing. Not much better on the commodity front. I see a lot of red here. Gold's down $26. Silver down 46 cents. Big down days for the precious metals. That is all on the back of your stronger dollar. Here is the DXY, or the dollar as measured against a basket of other world currencies, now at 109.8, up 1.47 or 1.36% on the day. Strong dollar is bad for commodities, which are predominantly priced in dollars. And you can see that across the board here. We've got copper's lower, platinum, palladium, crude oil's modestly lower, only down to about 13 or 14 cents. We're going to talk a lot about oil today. We've got Brent is also down about 50 cents. Natural gas is up a little bit. Heating oil is down. Really just a mess all around here. Grains are down. Base metals are down. Commodities not doing so well. Let's take a look at silver, my favorite of the shiny metals. We had a big red candle down this morning on the back of that CPI report. Looks like we bounced back a little bit. Some sellers came in, but they ran out of gas. And here we go down again at 1939. Giving up not all, but most of the gains from that nice run we had yesterday. Actually, was it all? Let's look at a one-week chart here. Not quite all the gains we got yesterday, but still, I thought we were close. We're going to talk about silver a little bit if we have enough time. It looks like Silver Squeeze 2.0 may be shaping up, folks, and it's coming at the worst possible time for the banks. That could be messy. We're going to talk a little bit about that. Gold, the same thing, except gold did not get the bounce that silver got a little bit of a bounce, but nowhere near with the momentum silver had. Gold now trading just above the lows of the day, down $27 or 1.56%. So nothing's really doing well today. By the way, Bitcoin, where we go? Bitcoin, our store of value, our inflation hedge, nope, down 5.89%. All right, looks like even your traditional safe stores of value, folks, are not holding up right now. Gold, silver, Bitcoin, everything's selling off right now. All right, this isn't across the board. Nobody is being spared. Kind of sell off. So not a whole lot of good things happening in markets right now. And I talked about this a little bit. For the comedic entertainment value alone, you really need to be following the inverse Kramer ETF, not Jim Cramer on Twitter. All right, you guys really need to be following this because here we go. The legend does it again. And here's a picture of the man, Jim Cramer, saying the Fed may be winning against inflation, says Jim Cramer. Not so much. Jim, inflation has been peaking since last April. Cramer, wrong again, Jim. Stay with that talking point. You're going to be right eventually. It might take a few more years, but eventually you're going to be right. Don't let this get you down, Jim. I knock CNBC an awful lot on this channel. I don't often have any nice things to say about CNBC, but I got to send a shout out to Guy Adami, who is like the one silver lining and the otherwise hive of scum and villainy that is CNBC. I've always liked Guy Adami. I enjoyed him back when I used to watch CNBC, although I don't watch it so much anymore. He says, we make ourselves crazy interpreting the difference between 8.1 or 8.3% inflation, when in reality, if measured correctly, real inflation closer to 17%. And that's a great point. A little bit of nuance, I think, is in order here. We're sitting here nitpicking on tenths of a point when really inflation is almost 10% higher than they're telling us. And anybody who pays rent, anybody who buys food, anybody who pays utility bills knows that for a fact, even though this sick joke that is the consumer price index is still telling us, oh, it's only up 8%. It's not, folks. And, when Jerome Powell was on TV about 2 weeks ago, maybe it was 3 weeks now, and he was evoking Paul Volcker, and he was saying we need to prevent inflation expectations from becoming unanchored. And he was saying, we want to prevent inflation from getting as bad as it was in the 1970s, so we don't have to do what Paul Volcker did to fight that inflation. Well, inflation is already worse than it was in the 1970s. They're just lying about it. And Guy Adami is right on the money here. Inflation is worse than it was in the 1970s. By the way, send Guy Adami a shout on Twitter and tag Nobody Special Finance or tag me at JG Nuke in that one. Let him know I was talking about him. Maybe we get a tweet out from Guy Adami, help the channel a little bit. But my point is, it's already too late to pull a Paul Volcker because inflation is already worse than it was in the 70s. So while Jerome Powell is sitting here threatening to pull a Paul Volcker, the time to pull a Paul Volcker was last year when he was still printing money and still bidding up treasury prices and suppressing interest rates. So too little, too late from Jay Powell. And I got a couple of comments coming in. I got to send a shout out to some of my supporters. Thank you, Mike Bender from Robin RC Models. You are a gentleman and a scholar. He says, with all the shorts opening, expect a green day tomorrow just to dump even harder into the weekend. Bumps to shake out people. Shorts opening, that's an interesting thought, Mike. I would actually expect shorts to be closing out right now, taking profits. But to your point, you're right. I think a little bit of green is probably to be expected at some point, right? Shorts have to take profits at some point. And when the short trade gets crowded, the market makers and the muckety-mucks at Wall Street, they just love to run markets up and bid things up just to clean out the shorts and trigger some margin calls and then let the market fall again afterward. So, if you had shorts on yesterday or a few days ago, congratulations on those gains. You did a good job. I do not have any shorts on right now. I didn't have any shorts on before I went into this trading day. I'm not about to go chasing this market down right now because the time to put that bet on was yesterday. Hindsight is 2020. Don't try to FOMO into a short right now because you're probably going to get wiped out. Not financial advice, not a financial advisor. All that CYMA stuff. Do your own research and your own DD. But I do expect, yes, Mike, the market will dump even harder. Maybe into the weekend, maybe not. We're going to talk in a little bit about some really big events that are coming up in the next couple of days. But thanks again, Mike. I really appreciate the support of the channel, sir, as always, and your contributions, all the links and the research you help out with. Guys, you may not know this, but Robin RC Models, he sends me like 10, 15 links a day. He's like this scout who just scours the web, and everything he sees, he reports back. I have a couple of people that do that. It is such a big help sitting in this chair because there's just so much news and so many things. Nobody can catch them all. And I couldn't do it without the support of all you guys. So thank you so much for doing that. And I have to say thank you very much to Mr. AK for your super chat. Thank you, sir. He says, Shemitah, 7 cycles of 7 Jubilee year. I don't think the peasants get Jubilee. That's a very interesting thought. I've had a lot of people mention the Shemitah and the Jubilee to me, folks. I'm not terribly familiar with the scripture origins of it, so I'm going to do my best to summarize it here if you're not familiar with it. But the Shemitah is this cycle that goes all the way back thousands of years, and it's basically a 7-year cycle. And correct me if I'm wrong, AK, but I believe in the 7th year, you're supposed to let the land rest, which is kind of a euphemism in modern times for the market's tank, a recession. About every 7 years, the market goes down. And then at the end of the 7th 7-year cycle, which would be roughly every 49 or 50 years, you get the debt jubilee, which is when all debt is forgiven. It all gets wiped out, clean slate, everybody starts new. And it's very interesting because I believe September 26th is the 7th cycle of the 7th cycle. I don't know if it's at the beginning or the end of that cycle on September 26th. This is where my understanding falls a little bit short. But I do know it's in very close proximity to, well, student loan forgiveness was just done. Isn't that something of a debt forgiveness? A sudden wave of defaults would technically, or bankruptcies, yeah, that would be like debt being forgiven, right? So, it's a little bit prophetic and the timing is awful convenient. So I encourage you guys to go and do a little bit more research on that subject. If you're interested, there's a lot of history lesson in there. Again, full disclosure, I am not an expert on this subject, but thank you very much, AK. I appreciate the super chat and the support of the channel. And I got my man, Matt the Cheeseburger. What's going on, Cheeseburger? He says, buy silver and beans. Yes, beans and rice, best performing asset class of 2022, bar none. If you think I'm kidding, take a look at the video I did last week about beans and rice. They have outperformed every asset class by a huge margin. I'm talking stocks, bonds, real estate, Bitcoin, gold, silver, all of it. Beans and rice has outperformed all of them. And people always make fun of me. I always tell them, and people, especially folks who don't spend a lot of time in finance, they come up to me and they say, Jack, what should I be investing my money in? What should I buy? And I hate when people do that. Honestly, I really do. It's like putting me on the spot, and I feel this overwhelming urge to be right about everything because I don't want someone to go pour their life savings into something and then have it be wrong. I do get them wrong. I get a lot wrong. So, I'm not sitting here claiming to be like this guru who sees everything. I'm not a mystic, right, Mish?
Mystic.
But for the better part of a year, I've been saying beans and rice. And I first did a video on that back in March. I went back in that video and the beans and rice that I bought in March are up 30, 35, 39% in 6 months. Everything else I bought, all the stocks, nothing else has done anywhere near that. So thank you, Cheeseburger. And again, silver, we are going to talk more about silver. Thank you, Cheese, for the support of the channel. Because Silver Squeeze 2.0, man, it feels close. It feels awful close.
So that's what I tell a lot of people is when they ask me how or what to invest, because I get the question a lot too. I always just tell them about PSLV and let them go from there. That's where I start their journey.
Yeah, PSLV is a good one. Put a pin in PSLV. We are going to talk about PSILV because that is brewing. But first, I want to get to this one, folks. This is the calendar because we are at a very critical point in markets right now. And I just threw this calendar together real quick before we started this stream. Where we are in September. Here we are on the 13th, right? We got our CPI report today. I remember saying a couple of weeks ago during a live stream that there was really only 2 things that could save that bear market rally. And it was a dovish pivot from the Fed or a much lower than expected CPI. And when Powell came out as hawkish as he did at Jackson Hole, I remember saying, okay, that's now off the table because it doesn't even matter if CPI comes in low now. Powell made it clear it doesn't matter. Well, then obviously it didn't matter today because we didn't get a low CPI, so markets are just tanking right now. Well, tomorrow we get PPI. That's producer price index. And PPI is what the producers pay for their raw materials and their labor and everything else. PPI has a tendency to front run CPI. So we'll get a little bit of a window into the next CPI report tomorrow when PPI comes in. Then on Thursday, that's the big one. Quantitative tightening doubles on Thursday. That is when the first Treasury bonds will roll off the balance sheet at the accelerated pace of $95 billion a month. And that is a huge, huge milestone. That is nearly double the historical high of quantitative tightening that has ever been attempted. All right, and I've been saying it for a couple of days now on this channel. Nobody knows what will happen because it's never been done before, not even close. All right, and markets are already starved for liquidity. Bank of America CEO is warning, saying, if we don't, Treasury markets are getting risky. There's new issuances coming in like crazy because the government is on another spending spree. So we could be on the brink of a liquidity crisis, and a day later, we get quadruple witching. Quadruple witching is a special day. It happens 4 times a year. It's the day of the busiest transactions in the market. Quadruple witching is stock options, stock futures, index options, and index futures all maturing at the same time. And that's big because the market needs liquidity the most during quad witching, and it comes a day after we're doubling the pace of quantitative tightening. And coincidentally, this is also the 3rd anniversary of repo madness. September 16th, September 17th of 2019 was when the repo market spiked overnight to 10% because the market was starved for liquidity. Back then, we were only tightening at 50 billion a month. Now we're going to be tightening at 95 billion a month. 3 years later, almost to the day, and we've got quad witching coming up again right as we double QT. So there could be a freaking S storm in bond markets later this week. All right. I don't know if that's going to happen for sure. But the market is kind of broadcasting that. I mean, I showed you guys this chart in my live stream this morning. This is the 10-year Treasury. That's looking like a double top reversal pattern may be setting up right now. We're only 6 basis points on the 10-year yield away from that doubling, from a double top pattern there. I don't know what's going to happen later this week. I don't know if it's going to cause a liquidity crisis, but I can tell you all the ingredients of a liquidity crisis are there. All right, nobody knows what's going to happen. There's people claiming they know what's going to happen. They're making it up. Nobody knows. It's never happened before. You can theorize. You can give your best guess, but nobody knows. Now, I got a couple more super chats. I got to send a thank you to a lot of you guys. You guys are awesome today. Thank you so much, guys, for your support of the channel. Oh, I got to scroll. Where are you guys? Here we go. Mr. Contrarian08 says, I just went to Taco Bell, and the cheap tacos were $1.99. Good God, that's too much for a Taco Bell taco. That measly little bit of meat they put in those things. I should have known inflation would still be high. What about oil being back at only negative 0.15%? Interesting, Contrarian. Is that negative 0.15%? Is that from the CPI number? Let's see. I don't see the negative 0.15 in the CPI. He must be talking about crude prices. But thank you very much, Contrarian, for your support of the channel. Let's see. Now, crude is not down that. I'm not sure about the negative 0.15, Contrarian, where that's coming from. Let me know in the comments if you can add a little bit more flavor to what that means. What's that, Mish?
Something about Kitco.
About Kitco and oil? All right. You got me, guys. You got me totally by surprise with that 0.15. Again, there's just too much.
Now he's saying crude.
Okay, it is crude. All right, we've got a lot to say about crude in a little bit, Contrarian. So if you don't mind, we're going to put a pin in that for just a few minutes. I promise we're going to get to crude and we're going to get to silver because there's a lot happening in both of those markets that could affect other markets around it. But thank you very much, sir. I appreciate the super chat and the support of the channel. You guys are awesome. Hey, there's Mike again. What's going on, Mike? He says, don't forget the porkflation in China. They're starting price caps now and likely QE, go burr, program later this year. Yeah, the PBOC, the People's Bank of China, they're already pretty much going burr, although their liquidity injections are nowhere near the size of what the Fed has done here in the States, but they're lowering rates while everybody else is tightening. So the People's Bank of China, the Chinese central bank, they are definitely in dovish mode, loosening, trying to prevent what's happening in their real estate market from taking out their entire economy. Here's a hint. It will not work. But yeah, then price caps, you guys know my position on price controls. Price controls just don't work. They don't work. They're government mandated shortages. When you put a lid on the price, all you're doing is saying somebody's not going to get some. All right. When things are rare, someone's not going to get some, whether you control the price or not. All right. And either way, someone isn't getting it. Capping the price doesn't make more supply appear. All it does is breaks markets, and it disincentivizes more supply from coming into market. Because when you cap the price, well, then there's no reward for me investing in my business to produce more, is there? So nobody's going to produce anymore. So price controls do not work. For the 1 millionth time on this channel, price caps don't work. I hope you're listening, Europe. Please listen. Europe doesn't listen to me. They never listen. Whatever.
Well, Europe is also trying to tighten and ease at the same time.
Oh, that's going to work out great, right?
Yeah.
Like,
isn't it?
Yeah. You guys ever been driving and you're like,
and slamming on the gas at the same time, you just kind of spin out?
Yeah, that's great for your engine, right? I mean, look, God gave you 2 feet and GM gave you 2 pedals in your car. Coincidence? You might as well slam on both of those and see what happens. Only good things, right? I mean, I'm just a mechanical engineer. I'm sure nothing could go wrong if you step on the gas and the brakes at the same time. I just throw them out there. So yeah, what Mish is talking about with the Europeans doing QE and QT not QE. They're doing QE and raising rates at the same time. Those are 2 counterproductive things. They're printing money to buy the debt of the southern countries, the pigs, Portugal, Italy, Greece, and Spain. But at the same time, they're raising interest rates to fight inflation. So they're inflationary, but they're deflationary at the same time. What they're doing is they're just increasing the punishment that the northern states are going to suffer from, because the northern states are going to suffer from the higher interest rates, which will hurt business, which will raise unemployment. At the same time, the north is still going to suffer from the inflation caused by printing money to bail out the southern states. At the same time, the central bank in Europe is going to be printing money to bail out the energy companies, either directly or indirectly. Whether they go through the banks or directly to the energy companies, they're going to try to print their way out of this problem in Europe. So, man, the world's just full of good news, isn't it? Thank you so much, Mike. I appreciate the support of the channel, brother, as always. And, yeah, we're watching that China story. I haven't done a China video in a while, but that is still out there. It's like there's this 3-way race going on, a 3-way race from the bottom. Who's going to break the world economy first? Will it be Europe? Will it be China? Will it be the States? Time will tell, but somebody's going to do it. And there's Cheeseburger again, says, shove it into reverse. You're doing 90, Jack. Yeah, let's do that while we're stepping on both pedals at the same time, Cheeseburger. What's the worst thing that could happen? Let's also shift gears while stepping on both pedals. I got a kick out of that, Cheeseburger. Thank you, brother. Thank you for supporting the channel, you guys. You guys are really awesome. All right, I got 2 topics that I promised you guys. I promised you guys oil, and I promised you silver. Mish, you brought up silver a while ago, so we're going to do that one first, because this could add further strain to the financial system. All right, first of all, the silver chart. This is looking at a weekly chart. We had a big run up yesterday, and if you guys haven't been following what's been going on in silver markets at the COMEX lately, the COMEX inventory is down around 46 million ounces of silver available in the COMEX. All right, now when the silver squeeze won,
Jack, let's make sure we clarify that. It's not down 46 million. It's down to 46.
Down to 46 million. Okay, I apologize, guys. Yes, and that is the registered category. That is the silver that is for sale in the markets. Just over 46 million ounces. All right. Now, when Silver Squeeze 1 started in January of 2021, there was about 147 million ounces. Now there's 46. All right. So that's a lot of silver disappearing from markets in a very short amount of time. And lately, it's been gaining steam. I mean, we've been shedding a few 100,000 ounces a day. So the ground is getting a lot closer. Now, the price of silver, let's zoom out on this chart a little bit. The price of silver is down. It's way down over 6 months. Even though the inventory has been getting lower, the price has been getting lower too. One of these things is not like the other. Something's got to give here. All right. Now, I saw this today. Where is it? Here we go. And this was on Twitter. It says, ladies and gentlemen, I present to you with the little comment, PSLV short sale volume up a staggering 731% from Friday's close. Somebody is shorting the heck out of the Sprott Silver Fund, PSLV. It's the single biggest one-day percent increase on record. Now, why do I mention that? Because unlike the SLV, silver ETF, which is basically just a glorified mechanism for suppressing silver prices, PSLV is run by Sprott. They don't take your money, buy silver, and then just turn around and short the price back down. They just buy the silver and hold it. Their fees are a little bit higher because of that. But if people are piling into PSLV, buying more and more shares of this, it tends to drive the price of PSLV higher than the net asset value or the value of the silver that's in the fund. So what they do is they issue more shares, they bring the price back down to the net asset value, and with that money from the new shares, they go out and they buy more silver. So somebody is trying to make sure PSLV does not trade at a premium to net asset value. And I got to send a shout out to the Happy Hawaiian on Twitter who connected these dots. If you're not following the Happy Hawaiian on Twitter, you should be, because he is fantastic. He's been on top of this whole situation really since the silver squeeze started. He's one of those guys that I've had the benefit of reading his research and his DD, and he's just been fantastic. And he's right. You know, if PSLV starts trading at a big premium to the value of the silver in the fund, they're going to go out and buy more silver. Well, they don't source the silver directly on the COMEX, but they buy it from people who do. So if PSILV starts issuing millions of shares and buying more and more of these 1,000-ounce bars, it's going to accelerate the drain on the COMEX. So somebody is putting a lot of muscle behind suppressing the price of this PSLV fund. And if you followed the level in the COMEX in 2021 as it was draining down throughout the silver squeeze movement, it was directly proportional to the silver flowing into the PSLV fund. So this is the perfect mechanism for draining the COMEX, and right now people are trying to suppress it and keep it from running. So the silver squeeze is coming back, folks, and it's coming back big. Today was a setback because of what happened in the with the inflation print. But keep your eye on this story, because if this were to go at the same time as all of these QT stories and at the same time as the Fed tightening next week, if we get some kind of a liquidity crisis, at the same time silver runs like crazy, it's going to make a mess in the financial system. It'd be a mess I would just love to watch, because I love silver. That's where this channel was born, out of the silver squeeze movement. And I hate what JP Morgan and the market makers did to the silver squeeze the first time around. And I would just love to watch it play out one more time. And by the way, I got to send a shout out to my man, the Economic Ninja, who has created the idea of silver in my stocking, hashtag silver in my stocking. And what a great idea this was. Ninja did a video a couple of days ago where he recommended to you parents out there, with all the crap that you're going to put in the stocking at Christmas, why not put an ounce of silver in there? All right. They got plenty of socks. They got plenty of all the other crap. Throw an ounce of silver in there. Teach them a little bit about sound money, even if they're going to look at it and then they'll set it aside. Hold on to it for them for a little while. Teach them a little bit about savings. Teach them a little bit about inflation at an early age, because I can tell you, if you don't teach your kids about money, nobody will. All right. It's the opposite of drugs. All right. You know how they say talk to your kids about drugs or somebody else will? Not with money. If you don't talk to your kids about finance, nobody will. Our education system has produced the most financially illiterate generation this world has ever seen. And if you think I'm kidding, look at what they're doing in Europe. Look at what they're talking about. Price controls to solve inflation problems. Brilliant. Why didn't I think of that? When things get too expensive, why don't we just make it illegal to be more expensive? It doesn't work that way. So here's what I do with my kids. And Ninja, I love this idea. I am totally doing this. When my kids work, all right, and my kids, they're hard workers. They love to earn. God bless them. They're starting to sell their eggs and stuff from the chickens. Like I love what they're doing. I make them spend half of the money that they earn on silver. Now I know that seems tough, and you know they hate it when I do that. They're like, "Oh, why do I have to buy stupid silver?" There's two reasons I'm doing that. Number one, I'm teaching them to pay themselves first. I'm teaching them to save money, but to protect it from inflation while they're saving it. And I'm also teaching them to hate taxes, because they're getting used to the fact that when they earn money, somebody else comes in and takes half of it and helps themselves to it. So I'm teaching them to hate taxes. I'm teaching them to fight inflation. I'm teaching them to work hard. I'm teaching them to save money, all in one place. And they're getting a little stack of silver at the same time. So my kids have their little silver stacks are growing right now as we speak. So Ninja, this was an awesome idea. Hashtag silver in my stocking. I can't take credit for the idea. Ninja came up with it, but I absolutely love this story. All right. Now, I promised you guys
I just want to
oil.
put a plug in there for these symposiums we go to.
Yes.
Ninja marched that out at one of the symposiums during a roundtable. So when
Silver
you go to
in my
these things,
stuff.
you do get things ahead in advance. I just want to put that plug out there.
Yep. And Silver Symposium was an awesome time. I met a lot of you guys, a lot of these names that I see in the comments here. I know a lot of you guys were out there. Will Sorensen, I got to meet out there. Pepper Farms came out and we met at the Silver Symposium. It's so great to put a face to these names. You know, I love reading your comments and interacting with you guys in these streams, but to actually sit down and, you know, talk to you at one of these events or have a drink with you at the bar afterwards, it really is just a real pleasure. And I'm just having a blast doing this. I wish I could go to every single one of these things. I just can't. There's just too many of these all the time. But I'll go to as many as I can. I love doing this. And that's a good point. He did first mention that during that roundtable at Silver Symposium. All right. Now, I promised you guys oil, didn't I? Because here's the thing. The big negative in the inflation report today was energy. Let me go back to this real quick, right? All these numbers are big and high. Here's the negatives, right? Almost all of the negatives were in the energy category. Fuel oil, gasoline, the energy index itself, right? Negative 5% month over month, negative 10% for energy commodities, negative 10.6 for gasoline. And I mentioned this on the stream this morning. It's all fake. The energy market right now is fake. The price of energy is being artificially suppressed by the Biden administration for political gain. And it's as simple as that. And here, look no further than this story came out yesterday. U.S. emergency oil reserves tumble to the lowest level since 1984. And what we're doing in oil markets is no different than somebody spending their savings to make themselves look wealthier. Say, like, look how rich I am. Look how much money I make while they're spending their savings down to zero. It's fake. You're going to run out eventually. And then if you don't have any income, if you're not producing any oil, the price is just going to rocket higher. And that is exactly what's going to happen. U.S. emergency. Go ahead.
I'm sorry. So there's this movie out there, and someone tell me what the name of the movie is when y'all figure it out. It's about the boxer in the 1920s that broke his hand and had to go work at the docks during the Depression, and then he comes back even stronger. But what we see, the reason I'm bringing that movie up is
Jimmy Braddock. That was Cinderella Man.
Okay.
The Bulldog of Bergen. Yep.
See, his agent had like a table left. He is literally selling everything he can to maintain that lifestyle.
Yep.
Right. And that's what everybody is doing. That's what the United States is doing.
And just how much is the U.S. doing it? Funny you should ask. U.S. emergency crude oil stocks fell by 8.4 million barrels last week to 434.1 million barrels, their lowest level since October of 1984. And folks, that's essentially the lowest level ever because in October of 1984 was still the initial filling of the SPR. We only created it a few years earlier than that. So they're releasing more than 1 million barrels of oil per day to artificially suppress energy prices to make inflation look better than it really is. It's fake. And this is supposed to end on September 21st. On September 21st, they stop dumping this oil. What do you think is going to happen when 1 million barrels per day, 1.2 million barrels per day of supply disappears from the market? The price is going to go up. But wait, there's more. Because they have to go back and they have to buy it back. Everything that they're dumping from the SPR, they have to refill it. So I was talking on Twitter with the Happy Hawaiian and a couple of the other guys yesterday. What they're going to do is they're just going to wait until the next Congress takes over. It's probably going to be at least a partial power shift in Congress is going to happen this year. And then they're going to start buying the SPR oil back. It's going to drive oil prices higher, and they're just going to blame the other side. And it's the Department of Energy that does it, so it doesn't matter who wins in Congress. It's going to happen. It's fake. It's all fake. Anyways, I got a couple of supers here. I got to mention here is Don Murray. Hey, Don. Long time no see. Don, where I met you, was it in Denver? I think I met Don Murray. The name sounds familiar. I'm pretty sure it was in Denver I met you. He says, how would you long silver? Which stock, ETF, or mine? Okay, that's interesting. I do own a couple of silver miners, although my DD is not really up to date on which is the best one. So if I were to go long silver today, which I have not added to my silver position in a while. But if I were, I'd probably start with one of the SIL or SILJ ETFs. Again, that's where I'd start my DD because I like to play the averages. Miners is hit or miss. It's a lottery, right? If you could pick the wrong one or you could pick the right one and get big gains. I like to pick the ETFs, play the averages, and ride the sector higher. I personally own the PSLV ETF. I like that. My preference is to hold physical, but there's just limitations on how much physical you can buy and how much you can store unless you want to be into the midnight gardening scene and everything like that. My neighbors have enough reasons to think I'm weird already. So I like PSLV. I like physical. I like the SILJ ETF. I'm going to stop short of recommending any individual silver miners, but there are a lot of them out there. Mish and I are also doing a little bit of research into some other areas where you can get into silver and possibly avoid some of those premiums. We're not quite there yet. We're close. We're doing the DD on that. I hope to have more to share with you guys in the coming weeks on that subject. But thank you very much, Don, for the super chat and for the support of the channel. As always, I hope I at least partially answered your question, sir. And I also have, who is this here? I have got Mr. AK again, says, remember the 26th of September, Rosh Hashanah, the start of the harvest. So it is the 26th is the culmination of that Shemitah Jubilee cycle. I knew it was the 23rd or the 26th. Hey, it's just a few days after the next rate hike. The next rate hike happens on September 21st. Nomura is saying 100 basis points now. Ouch. Ouch. By the way, we haven't been to markets. I know I'm on the oil thing right now. Thank you very much, AK, for the super chat again, for the support of the channel. We got to go back through the indexes real quick. The market was in free fall.
Go to the indexes. They just hit 4%.
Yeah. Oh, wow. We've got the S&P is down 180 or 4.38%. Just off the lows of the day. The Dow is now down 1,311 points, 4.05%. At the low of the day, 1,300. Yikes. What's the lowest we've seen in any of these streams, Mish? Did we hit 1,500 back in May in one of those big sell-off days?
No, I think the most we've done live is we got one to 1,100.
Wow, is this going to be a record for sell-offs?
Well, it's not only the record for sell-offs. Have you taken a gander at people in the watching?
Oh, I got what you're saying. Yeah, I have. I am watching that one. But I got to tell you, Mish, I'm looking here. It was, you said 2 o'clock on the stream this morning after we resolved our audio issues. Here I have my cursor right at 2 o'clock, and we were pretty much flat. And you missed it by just a couple of minutes. It's like the margin call started going out at 4 o'clock, but the selling didn't start until about 2 o'clock. But the selling didn't start until about 2:20. But, man, you were right. You said watch those margin calls late at the end of the day, and here we go in the last hour of trading. The market is just nosediving. And I'm afraid to look at the NASDAQ. Ooh, NASDAQ down 700 points, 5.5%. Have we had ever a 1,000-point NASDAQ day? Let me know in the comments. I don't know. Has the NASDAQ ever dropped 1,000 points? Maybe during the COVID sell-off? Maybe, but geez, almost 700 points, 5.48%. in a day. So just absolute bloodbath going on in markets right now. Let me skip over the commodities. I want to see, what is the Dixie at? 109.83, up 1.5 or 1.4%. And the 10-year Treasury yield, no, that's the oil chart. There's 10-year is at I got to refresh this, 3.422. We are just a few basis points high of putting in that double top. The high close was 3.483. If we close there tomorrow, I would be very, very nervous. I'd be very nervous about the bond market. And I have got my man, the cheeseburger is back. And let me bring this one up. Where is it? Where'd you go, cheeseburger? Here we go. He says, Jack, would you mind giving your thoughts on ASX ETF 000? Oh, wow. I don't know that one. Cheese, I really don't.
Yeah, I'm not feeling on that one either. It's 970 for NASDAQ though.
Okay, I'm gonna have to take a look at that one. Cheese, put a pin in that. I just don't know that one. ASX ETF 000, and nothing comes up in the ticker right away. So I have to, I don't want to look at the wrong thing and say something wrong. I just don't know about this one, bud. So you got me. Got to put that one in the parking lot. So cheeseburger 000. That is an O and not a 0, right? I'm pretty sure those are O's and not zeros. But thank you for the super chat, Cheese. And unfortunately, I don't have an answer for you on that one. Maybe I will shoot you that one in an email, though, if I have a chance to look at it. But thank you very much. I appreciate the super chat, as always. All right, we got to get back on the oil subject. And what did you say, Mitch? We were at 970 on the NASDAQ? Was the limit? Or was the big drop?
Yeah, that was the top 970.
Okay, so we're a ways off of that one. We would need a bloodbath in these last 20 minutes to get near that. But that would be a big one. All right, so we were talking about the SPR. We were talking about how the markets are fake. All right, oil, I've been trying to call a bottom in crude oil for like 2 weeks now, almost 3 weeks now. I've been so close, and it just isn't quite there. It's looking bottomy now. It's just not there yet. I want to see this RSI here get above this, what is it, about 48, 49 level, retest it, and break above it. But I can tell you oil is very close to a bottom right now. And here's one reason why I think oil may be close to a bottom. And this came out just today in oilprice.com. Secretary Blinken, that's the Secretary of State, he believes that Iran is either unwilling or unable to negotiate a nuclear deal. Now, I had initially been theorizing that the nuclear deal was going to happen because I think President Biden is just desperate for what he sees as a foreign policy win. And I thought he was going to do basically whatever they wanted, and that oil would sell off that day, and that day would mark the bottom. That was what I always envisioned happening, although it looks like we've basically agreed to everything they've asked, and then every time we agree, they ask for something else. So Iran doesn't want this deal. Iran doesn't think they need this deal, is what they're telling us. A new Iran nuclear deal is looking increasingly unlikely after U.S. Secretary of State Anthony Blinken said Iran had taken a step backward with its latest comments on the final proposal brokered and compiled by the EU. What we've seen over the last week or so in Iran's response to the proposal put forward by the European Union is clearly a step backward and makes prospects for an agreement in the near term, I would say, unlikely, Blinken told the media. All right, so this deal, folks, it's not happening anytime soon, if at all. Now, I've been saying for a while on this channel, the absolute worst case scenario for oil prices, probably the worst thing for the whole world short of nuclear war, would be if Iran were to close the Strait of Hormuz. That may actually be worse than if China were to attack Taiwan, believe it or not. If Iran were to close the Strait of Hormuz, the effect that would have on global energy markets and the effect that would have on inflation and food prices and, by default, crop yields, I think would probably have more of a humanitarian effect than the bloodbath that would be a war between China and Taiwan. I think it could be that bad. And now that this deal is falling apart, and I just see world leaders are just taking us an inch closer every day, an inch closer to World War III, day in and day out, right? And everybody's on Twitter right now celebrating what's going on in Ukraine, and the propaganda on both sides is in full steam. A desperate Vladimir Putin is not a good thing for anyone. Not anyone, all right? And every time I mention Vladimir Putin, my God, the trolls on both sides just come out guns a-blazing. You guys, you're adorable, whatever, all right? I think global leaders, I think they all suck. I share an equal level of disdain for all of them. Although I hold a special place in my heart for Justin Trudeau and for Vladimir Putin, all right? And we'll throw Xi Jinping in there while we're at it. Them in particular, I really don't like, all right? But I don't think a desperate Putin is good for anybody. And I think there's probably a lot of pressure right now being put on China and on Iran to create a new front in this CF that is geopolitics right now to try to distract the West from everything that's going on in Ukraine. All right, so I am very worried about what might come out of Iran in the next few weeks. And seeing this deal fall apart tells me that might be more likely. That would send oil prices not just higher, that would send oil prices to Mars, beyond the moon. All right. And then I saw this was just hilarious today. Biden officials are said to mull buying oil at around $80 a barrel to refill the strategic petroleum reserve. All right. This is hilarious because this is the Biden administration trying to jawbone oil prices lower. The arrogance on display here is absurd. These people think that they can drive oil to $80 a barrel just by saying that's the value they intend to refill the SPR at. It doesn't work that way. You don't have any pricing power in oil markets. Not when you've blown half of your savings, not when you have torpedoed your own domestic production. All right, there is just no chance that he's able to drive. I'm not saying oil won't go to $80 a barrel, but if it does go to $80 a barrel, it sure as heck won't be because Biden officials said that's when they're going to buy for the SPR. Just absolute hilarity, like the arrogance on display here. All right, looking back at the indexes right now, down 184 in the S&P. That is 4.5%. Still heading lower. Again, just off the lows of the day for the S&P, but the Dow down 1334, now 4.1%, a new low for the day and still going lower. We've still got 14 minutes of trading ahead of us. The NASDAQ is now down 726 or 5.7% at its day low of the day. So markets are still making lows. It looks like we are going to sell off until the very last second today. Not good. Congratulations to you guys who have shorts on. By the way, I have to mention this because, talking about all these things that are wrong in the world and everything that's going on, and look at this isn't Fox News, all right? And bear with me here, folks, all right? Because I know if I'm going to poke some fun at Fox News here, and it might bring out the worst in some people, but this needs to be said. Look at what just happened today, all right? The inflation came in higher than expected, and what that could mean for everybody on the planet because of what the Federal Reserve is probably going to have to do now. And, sending the dollar higher, the Dixie higher, and think about people in Sri Lanka who are struggling to get dollars to buy food. I mean, now the dollars are going to be even harder for them to get, right? This is real humanitarian impacts on everybody. And here's what the press is talking about. Here's this guy, Fetterman, running for Senate in Pennsylvania, the guy who's running against Dr. Oz. Talk about two clown candidates for Senate. Okay, we got that in the corner there. We've got whatever they're talking about here. Oh, voters in a key primary state don't like Biden. There's him scratching his head and whatever junk is going on down here. You know what I don't see anywhere above the fold on Fox News is inflation. I don't see one mention of CPI, of what's going on in inflation. In fact, if I control F inflation, where is it? I have to scroll down below the fold. There it is. You have to scroll down to even get to the word inflation. All right, that's on Fox News. Well, let's see CNN. Maybe CNN's a little better. Oh, okay. Here's what we get at CNN. Queen Elizabeth's coffin. Oh, there's Vladimir Putin. There's Elon Musk trying to buy Twitter. I don't see any mention of inflation anywhere here. Let's see. Control F. Doesn't even show up on the homepage. Did I type it? Nope. No mention of inflation on the front page of CNN. Biggest story in the world. They don't mention it. How about MSNBC? What do I see? Oh, why my money's on Republicans or Democrats? Oh, here we go. Trump, January 6th, official documents, whatever's going on there. Nope. No inflation. Just a bunch of reasons why we should all hate each other. No mention of what leadership is doing to the world. Here we go. You have to scroll down halfway down the page before you get to this tiny little mention of inflation here. What a despicable low journalism has reached in this country. And I'm sure it's this way in Europe. I'm sure it's this way in Asia. But on a story where everybody's retirement, everybody in the world is getting poorer right now, except you few folks who were short the markets. Congratulations for you guys. Everybody else is getting poorer right now, and they don't even cover it. What a despicable state the world of journalism is in. If you are a journalist right now, think about being a greeter at Walmart because your job is a joke, absolute joke. What you have sunk to, what you have created, this ugly, hideous political thing that is going on. No mention. I couldn't believe it when I went looking for that story. I couldn't find it. Anyways, Mr. Thabu Elof? I'm wondering, is that like something backwards? No? Okay. Hello. Thank you, Thabu. I appreciate the support. He says, thank you for all the great content you provide. Well, I tried, Thabu. I tried really hard, actually. So you're very welcome, sir. It is my pleasure to bring you guys this content. I love doing this. I love following markets. I know I get a little angry sometimes. I get a little heated, like just a few seconds ago with the Fox News and the CNN, the MSNBC thing. I apologize. Sometimes I get up on my soapbox and I get a little verklempt, but I really do enjoy doing this. I absolutely love doing this, guys. So thank you, Tabu. Thank you, everybody who's watching. All 1,500 of you guys right now. Wow. Thank you, 1,501 YouTubers who are watching right now. You guys are awesome. Please remember to like this video and subscribe to my channel. This is our second live stream today. Anytime we see the Dow go down by 1,000 points, we do a spontaneous live stream. We were live this morning for the CPI release. And, well, we had about 1,250 or some odd on that one. And, man, just a lot of you guys came out. We go live every Friday, every Tuesday morning. We get together on Wednesday with our Patreon supporters. We do a Zoom call. It's a much smaller group, but it's a two-way communication back and forth. There's a link in the description down below if you feel so inclined to talk about that. But looking forward to that. That is at 3 o'clock tomorrow. I'll be meeting with the Patreon guys. Looking forward to talking to you guys as I always do every week. But we have 9 minutes left of trading right now. And, oh, I missed another one. I've got Mr. John Q. Hello, Mr. Relatively Anonymous John Q. Says it's all CIA propaganda, Operation Mockingbird. I'm not familiar with that specific historical reference, Operation Mockingbird, but I catch your drift. Break the people up into little groups, convince them to hate each other and fight each other, and then you can get away with doing whatever you want to them. That's why most of the news on either side, right and left, is designed to make us hate each other and overlook what's being done to us. So thank you, John Q, for your insight. I got to look up Operation Mockingbird. I'm not familiar with that one. But I'm sure I'm just going to love what I find when I Google that. Oh, boy. Maybe I'll say DuckDuckGo. Maybe I'll do that. But, yes, thank you very much, John Q. I appreciate that. And Mr. Contrarian 08 is back. He says, our corrupt media is like the mudslingers in the 20s. Yeah, probably worse than the mudslingers because that's pretty much all they do is slingeth the muddeth. And, again, it's just bad. The state of journalism is really, really just reached an awful low. Like, you start with a political goal, and then you go out and you seek news to suit that goal. And regardless of what you find, you spin the story such that it supports that pre-existing goal. All right? People who do that in science have no credibility. Their careers are over. Like, you need to present the facts, period, hard stop, and then shut up.
Well, you know where the term yellow journalism comes from, right?
No, I do not.
Back in the 20s, anybody that did basically the crap that's going on right now was called a yellow journalist because they were poorer papers, and the paper would turn yellow quicker.
They would what their papers? I'm sorry?
The paper was cheaper.
Ah.
It would turn yellow faster. I dropped 2 things in private chat for you.
Okay. I got one more here from Mr. Atomic Coyote. How bad do you see things getting if rail workers go on strike at the end of the week and it sticks for a while? I can't really tell you how bad it could get. All I can tell you is a couple of the knock-on effects that I would see happening. I mean, how bad really depends on how far it goes from there, all right? But I can definitely see it sending gas prices higher, right? Because the trains, if they stop running, the trains run on diesel usually. So if the trains run on diesel, it could send diesel prices down a little bit, but it could send gasoline higher. Although now you're going to have a lot more trucks running, and the trucks run on diesel. And the trucks probably run a lot less efficiently than the trains do. So you're going to see your fuel prices go up. You're going to see your gas prices go up because you're going to have less efficient modes of transportation being taxed to make up for the lack of rail transport. You're going to have a mess in your grain markets, and you're going to have a mess in coal markets because a lot of grain and a lot of coal moves by rail. So we're going to have extra coal piling up where we don't need it, and we're going to have not enough where we do need it. Same thing with grain. I don't know what that's going to do to the markets for those things. I guess it depends on where it piles up and where it runs short. But it's just not going to be good for anybody. And look, people, the guys working on the railroads, they're living with the same stuff we're living with. Their cost of living has gone up 20%. Of course they want to make more money. Everybody wants to make more money because it got so expensive to live. This rail strike is the direct result of the Federal Reserve printing money through the pandemic. Absolutely. This is what happens. And they don't want the wages to go up because they're afraid of spiral inflation, of higher wages driving things up. All right, Mitch, I'm probably not going to get to those things that are in the super chats right now. I can't stop and go to click on those links. Let me get a couple more.
Fine.
You guys.
Yep, those are just good reference. And thanks, guys, for all the super chats coming in.
Yeah, I'm having trouble keeping up with it. I got my man Harry Dan too, the maker of the MMRI chart on TradingView. What's going on, Harry Dan 2? Says it's truly insane how both Dems and Republicans in the media always seem to focus on the wrong thing. That's right, they absolutely do. It's almost like, look at what the magician is doing with this hand when he's robbing you with the other one. All right, maybe the lesser of two evils isn't always the best choice, but not making a choice is the worst. We must act for the good. You know, you mentioned how the lesser of two evils may not always be the best choice. Well, my personal theory, Harry Dan, too, and that's a good insight, is the reason that we are stuck with a two-party system here in the States is because third-party candidates never have a chance. Because nobody votes for anyone anymore. We only ever vote against the other guy. And if you're only voting against the other guy, then any third-party candidate is nothing but a spoiler that helps the other guy, right? That's what they used against Ralph Nader. That's what they used against Ross Perot. That's what they use against, who was the guy? The What's in Aleppo guy. Oh, my God, the candidates the Libertarians put up. I really want to vote Libertarian in a primary. They just put up the most awful candidate. Gary Johnson, that was his name. What's in Aleppo? That was his big saying, like, yeah.
Commentary on the Libertarian right there.
Yep. So, Harry Dan, thank you very much for the support of the channel and for the super chat. And that is a really good insight. As long as we only vote out of fear against the people we're afraid of, we're never going to get a third party. And we're only ever going to have two awful choices. And I'd add a little bit more flavor to that, if you will. As much as you hate the two-party system, all right, the reason why we get god-awful right candidates and god-awful left candidates is because only the god-awful members of both parties vote in the primaries. And so we get the favorite pick of the worst among us, and then we have to pick between the two of them. Maybe if more people in the middle would participate in the primaries, it might bring a little bit of reason to both sides, and we might get some halfway decent candidates that are a little more centrist. I just throw them out there. But as long as the radicals on both parties are in charge, we're only ever going to get radical candidates. Just throw them out there. Thanks very much, Harry Dan, for the support of the channel, as always. And Dakota Prairie, hello, sir. Thank you very much for your super chat, sir. And he says, I love your commentary. Well, thank you very much, Dakota Prairie. I appreciate that very much, guys. Your generosity. Thank you very much. Thank you so much for supporting the channel. It really means a lot to me. I appreciate it, you guys. Again, I love doing this. And, well, let's see. We got 2 minutes of trading left. Let's see. Are we selling off in the close here? Let's see. We are down 171 or 4.2%. Looks like we came just a little bit off the low of the day. Not by much, though. And let's see what we have in the Dow. Down 1,216. Again, just off the low of the day, or 3.76%. The NASDAQ also just off the lows, down 694.97 or 5.46%. So rough day all around. We're in the last minute of trading now. We'll see where it closes at. What else did I have I wanted to talk to you guys about? All right, real quick. Something that warrants watching. Fighting has broken out in another part of the world. I apologize to keep bringing you bad news. But my buddy has been sending me messages on Twitter all day. Armenia and Azerbaijan are going at it. Not just lobbing artillery across the border, but actual armor and fighting going on. I'll be honest with you, I am not very familiar with the geopolitics of this region of the world. I can tell you Armenia, that is a CSTO country. That's like Russia's NATO. So if Armenia does the equivalent of evoking Article 5 for them, that could potentially draw Russia into the conflict. You've got Georgia is right there. Russia has previously invaded Georgia. You've got Iran is just to the south, and I've been warning you guys about Iran and the Strait of Hormuz for a while now. So more failure of leadership, more of this belligerence and this whatever it is that's going on. The world just keeps drifting closer and closer to World War III, sadly. So we're keep an eye on that story. Again, I don't know what this is potentially going to turn into. I just wanted to mention it. Not a whole lot economically going on in that part of the world. It's not like it's going to create a big shortage of this or that, but still, anytime the fighting breaks out, it's just something you got to keep an eye at. All right, guys, it is 4 o'clock. The markets are closed. The final tally of the day, down 177.89 points for the S&P 500, just off the lows of the day, down 4.33%. The Dow ends up closing at 31,100, down 1,280 points, just under 4%. Tiny little pop at the end there, but certainly not enough to give us any positivity. And the NASDAQ ends down 706 or 5.54%. So the market did not at all like this inflation report that we got this morning. It means a more aggressive Fed. It means no pivot. It means get used to higher interest rates. It means the housing market is going to keep getting worse. It means Bitcoin is going to keep getting worse because cryptocurrency is now behaving like a derivative of the debt market. Also, keep your eye on Tether. Tether could now, with interest rates going to head higher and more tightness in debt markets, this could cause problems with Tether, which is basically an unregulated debt instrument. And Tether is basically the dotted line that touches all points in the cryptosphere. So, the story from a few months ago about Tether losing their peg to their dollar, that one kind of fell by the wayside. We could see that come back in the coming weeks. Keep an eye on that. Keep an eye on that silver squeeze move. Keep an eye on oil going on. My God, there's so much going on in the world. China, the European energy crisis. Don't know where to start, where to stop. We will try to cover all of it for you guys as well as we can. And Contrarian08 is back again. He says, what do you think about leaving the U.S.? We want to relinquish our citizenship and move to a CPI, citizenship by invest, tax haven country, small government there. I'll be honest with you, if it ever gets so bad that I move the U.S., I'm not sure there's anywhere in the world safe to go, to be honest with you. So I like it here.
Safe for a little bit if we go down that to where people have to move, but I understand what you're saying, Contrarian. It's always nice to have a good exit plan, if you will. You want to check your back page, sir?
Yeah, there is. Oh my goodness, we got somebody jumping in here. What is this going on? Hold on, guys. We have a new visitor here, and I am going to add him to the stream. Contrarian, thank you very much, sir. Not leaving the States anytime soon. No plans to. I like it here. And what is up, Mr. Sage? What brings you to our neck of the woods?
I hacked the system. I'm in. All right, let me do this real quick. Am I echoing?
No, you're good. You're good. Your audio's fine.
So I did want to talk about the railroad a little bit because another thing that people aren't thinking about is the fact that these containers, I don't talk about it, when they're coming off the ships, they have to go someplace. They're going to fill up ports if they did strike. So I talked to my guy who worked at the port, and I asked, how long before you're full and you can't move? He says it would be about a week, I would think. So do I see them striking? I've been talking constantly with guys that are in meetings right now. And some of the head union people, I'm waiting for them to get back to me. But right now, it's 9 out of the 12 have agreed to things. So that's what, 4, 9, 10, 11, 12. So that's, 4 liners aren't. So right now, that's kind of what I'm looking at. In a meeting, that's all I got. Like right now, I'm in a meeting about a strike. I said, well, text me what's going on. But it's a lot just more than the food and the stuff and the gas and the energy and the coal. It's also about the ships that are absolutely piling up out there with goods that won't be able to get their containers off because the stacks will be full because no rail cars are taking those containers out. So it's a lot of other goods that would normally even go by truck. We can't get them off. We don't have the room. The building's full.
So I'm sorry, I missed the whole first part there. Because we got a little bit of echo now. Hold on. Give me one second here.
Yeah.
This is StreamYard. All right. I turned off the echo cancellation. So I missed the whole first part. I was messing with your audio settings to try to clean up the feed a little bit. Are you saying that the rail strike is less likely now or more likely now? Sage, I think you're on mute, bud.
Am I in now?
Okay,
There you go.
There you go.
Okay, I don't know why I have an echo. Let me make sure I'm... Okay, am I there now? All right, perfect. So basically...
Dang, Sage, I lost you again. Keep talking.
All right.
Okay. Hold on, Sage. Let me just try to do this real quick. So what I understand, there are four. Why am I hearing this? There are four rail people that haven't agreed to the strike yet, and they still have to go yet, right?
Correct. Do this real quick on my end. That should fix my problem. Okay, can you hear me now? Okay, perfect. All right, so basically there's nine out of 10 who have agreed that you still have the class ones, which are the largest railroads that are still striking. I'm talking basically to people from the rail that have been texting me that have been in meetings about striking or not striking. So the biggest issue is not not only just what they deliver, but it's the fact that there's no place to put the containers. Did you hear that portion? Basically, the ships are coming in, they take the containers, they put them in a stack, and then other cranes take them from a stack and stick them on rail, and the rail can take, hundreds of containers out of there because compared to one truck. Well, the issue is that the more ships that come in, there's no place to put these containers, and the ports fill up. And that's what the guy I have a guy that works on the dock that has basically, that's their concern, is that they'll have no place to put containers if the rail's not taking them out. So then whatever's on the boats would have to stay on the boats because they have no place to put it. Do I think they're going to strike? I think Congress would have to step in at some point and force them to work, just like Reagan did with the air traffic control one, where he basically said either go to work or you're all fired. And then he fired them all and then pulled their license forever. Logistics is something that has to keep moving, and I think that's a big concern.
All right, so guys, you may have to go on mute while I'm talking. I don't know if you get an echo or not. I was on mute while you were talking, Sage, but understand politically that's messy, right? Because you've got a leftist president, a leftist Congress and Senate, and they are very much pro-union, pro-organized labor, right? So if they come in and they force a striking labor union back to work, that really hurts them heading into a midterm election. But at the same time, if they don't do that, inflation gets worse.
Correct.
Because that means things start to get scarce on the shelves. So that is a political damned if you do, damned if you don't scenario for Congress. And of course, Republicans would just salivate at the chance to cause havoc in whatever system within the Democratic Party or within the economy as a whole right before the election. So this could be very ugly politically. Just a mess.
They're in a huge thing to get. They really want this not to strike, right? It's a big deal. So whatever the negotiations is they're going to want them not to. And I look at things from, okay, logistics can't stop. Doesn't matter who's the president. Doesn't matter who's in the office. It cannot stop. It doesn't just weaken our country. It provides an opportunity for, if our logistics were to stop in the conflict and situation that we have now with like Russia, it provides an opportunity for worst case scenario with conflict also, right?
Now, Sage, could you real quick talk about how just-in-time inventory works? Because I hear that phrase thrown around a lot, and I don't think people quite understand what it means for them if it breaks down.
Yeah, so just-in-time inventory is something that basically was back when it was actually a truck driver who thought of the ideas of putting containers on boats and bringing that in. Well, as we got technology, we were able to automotive mastered it. Like the automotive industry mastered just-in-time. I mean, you could be running out of door panels, and the door panels, the minute you get to that last door panel, a new load of door panels are coming in. So the thought process with just-in-time was, hey, in a big, nice, happy, trading world, we don't have to have storage. We don't have to have warehouses. We don't have to pay for electricity. We don't have to pay for people. With our technology, and we know where the ships, we can track the ships, we can track the items. We can get the items just in time when we're about to run out. And it's based on algorithms, and it's based on, I know how much you're using, so you should be running out, next month. I'm going to put an order in, and next thing you know, it's hitting your shelves. The problem with that is when the algorithms break, meaning the vid, and you get a run on toilet paper, we don't expect that. It breaks the algorithms, which causes a massive knee-jerk reaction. And then next thing you know, you're massively ordering toilet paper because you broke the record. You broke the algorithms. So it's a perfect system when everything's flowing good. But if, let's say, China wanted to do a bullwhip effect and shut down and reopened, it causes havoc in that, because I expected that to be there just as I was running out. And when it's not, it's not. So we're now slowly moving, or we're trying to. That's why there's a bunch of warehouses going up, from a just-in-time system back to a warehouse system. But that warehouse system costs more, because now you have to have a warehouse, you have to have water, you have to have electricity, you have to pay property taxes, you have to pay all this stuff, which raises those costs are passed on, and it raises the cost of those goods to all of us. So although just-in-time is cheaper for us, when it breaks, it's bad. And because we're expecting something to be there and it's not. And then you have that knee-jerk reaction in regards to ordering.
Well, speaking of stuff breaking, my camera's overheating or something right now. My feed keeps cutting in or out. But thank you, Sage, for illustrating how we basically walk this razor's edge.
We do.
Inventory-wise, and we're on the brink of running out of stuff basically 24/7. So a rail strike is a very big deal for quality of life.
Yeah, it's a bigger deal because because we have so much stuff coming in right now, that stuff will sit. And next thing you know, it won't be going to the stores when we need it. And remember, stores run on algorithms. They need to know when things are going out, when they're coming in. They know what you're buying before you know what you're buying. Well, right now, those algorithms are broken because people aren't buying what they normally buy. So it's very difficult ordering and keeping that flow going when those are all broken. You're muted. You're muted.
Hey, there we go.
Okay.
All kinds of tech issues today. It's just been great. It's been a riot. Thank you, Sage. I really appreciate you jumping in at the last minute with that and giving us that update in real time. That was fantastic. Real quick, congratulations to Zarkos. And thank you, sir, for the super chat. I hope you enjoy that champagne bath that you have well-deserved. This is now the second live stream where we have talked about Zarkos taking a bath. This is a family show, for crying out loud.
Yeah.
But,
what did I
Zarkos,
talk into? I don't know what happened here. What happened
Zarkos was short the market. I'm not sure what mechanism he used to short the market, but Zarkos did pretty good today while everything was selling off. So, Zarkos, congratulations, sir. Enjoy that champagne bath. And, folks, I think we're going to call it there because I'm starting to have tech issues, and I'm going to quit while I'm ahead. Just want to say thank you so much for all the super chats. Thank you, everybody. Thank you, my Patreon supporters. Mom and Dad, I love you guys. We're going to have a lot to talk about on that Patreon Zoom call tomorrow at 3 p.m. Link down in the description below if you feel so inclined. And, guys, anything you want to throw in at the last minute, Sage, I'll let you say.
Yeah, real quick, I just dropped my link. If you guys want to subscribe and stuff, I should be grabbing, as soon as these meetings are over, I'm hoping these guys are going to ring me back. If you guys want to grab my link and stuff, I'll probably have to do a quick video tomorrow on it or something. But I'm actually talking to the guys that are in the union, people that I've met with the railroad. We'll know hopefully soon.
All right. I will drop a link in the chats, and we will pin that. I think Mish lost his internet connection. Again, we ran a little long today, so I'm not going to let Mish do that. Check out Sage News Live, folks. He is the go-to channel for logistics on YouTube. And thank you very much for that timely update. All right, guys. Bloodbath and markets today. Tomorrow is another day. Till next time, live small and dream big.